Definitely a tough time of year. Hey guys, welcome back to my Thursday Night Live. My name is Geno D'Angelo, coming to you live from downtown Petoskey. I've got a good friend, one of my favorite people in the world to talk to, Ian Ashton with One Trust Home Loans, and we like to have him on. We haven't had him on in a while. Him and I were just talking about life and business and work, and who knows where this conversation is going to go tonight. Ian, thank you.
It's always a journey.
Yeah. Before we get into it, we were just talking before we hit the go live button. And again, if you're watching this live or the recording, drop a comment. Let me know where you're watching from. But Ian and I were just talking because my kid goes to Petoskey. His kids go to Traverse City, and they both, I think every school in the area has canceled for tomorrow because tomorrow is supposed to be the busiest, I'm not sure busiest, Jesus, the coldest day of our entire winter, and is predicted to be like negative 30. Is that what you're hearing?
Yeah, like by far, that's got to be the coldest I ever remember since I lived here. We've lived here 14 years.
Yeah, we were talking before we hit the live button, and it says -9. Now, -9, you think -9 and -30 are two different things, but that wind chill in northern Michigan. I was just walking into the office tonight for the live. We're right across from the bay, and that wind was just whipping across the water, and it's cold out. So I hope everybody's safe. If you're watching from northern Michigan, I hope you're safe. Leave the water running so your pipes don't freeze. Stay inside tomorrow. We're like closing our office. I know there's a lot of people that are not going to open tomorrow. So this is one of those rare occasions, and it seems like this winter weather every year, brings us something new. And I guess we probably should talk about exploding trees. Did you know that was a thing until today?
No, like literally, I saw the meme, and that's all anybody's been talking about all day. Every person, I was like, have you ever seen a tree explode? It's like, no, but I've seen the meme. Like,
so I just looked it up, and Click on Detroit says, can I share this article if we're both on here? I've never done this. Let me see if I can share a screen with both of us. Oh, to share a screen.
You can boot me out of here.
No, I'm not going to share. I just remember they did it. StreamYard, the company we used to do this, they changed the way. Can you see this, the exploding trees in the window?
Yeah.
Okay, so trees split apart in extreme cold cause sounds similar to a gunshot. So parts of Michigan are at risk for exploding trees because of extremely cold weather. Highs in Metro Detroit. This is a Metro Detroit article. So the highs in Metro Detroit are single digits. We're a long ways from Metro Detroit.
At least below 10 below zero, it said it needs to be.
Well, I mean, we're there. We're 10. What am I doing right now?
I guess it makes sense because there's a ton of moisture in the tree. So
absolutely, that's what happens. The sap,
it expands as it freezes.
That's crazy. It's weird that we've been here our whole lives, or most of our lives, and I've never heard of that. And it's been cold before, so I don't know.
Well, like usually it's the ice balls.
Yeah, for sure. So the reason.
So here's a crazy thing.
No, go ahead.
Oh, sorry.
No, go ahead.
So I didn't know this, but I have a lot of our executive team and my friends in our company are in Texas, and apparently a cold wave is hitting Texas, and they are 100% panic stricken. So like our CEO's assistant was sending me photos of the grocery store, and the shelves are ransacked empty in Dallas.
No, because I've got a friend in. Yeah, I've got a friend in Atlanta.
Yeah, it's going to be 10 degrees.
It's everywhere. So I've got to use. I didn't hear about Dallas, but Dallas to Georgia to I know North Carolina was having a hard time. Is this just like half the country?
I guess.
That's crazy.
Yeah, super weird.
I hope everybody's okay. If you're watching from northern Michigan, drop a comment. Let me know, what is your plan to survive tomorrow? We were talking again before the stream. I had a ski lesson scheduled for my son, and they called to cancel it. And they're like, when do you want to reschedule? And I looked at the forecast, and there's no end in sight. It's going to be cold for as far as the eye can see, or as far as my iPhone weather forecast. So we're in for a cold stretch.
What weather app do you use?
I just use the weather. I just use the weather app. I mean, what do you use? Weather Channel? I'm sure the Weather Channel is better, but I don't know.
I wish it was. It sucks. It's so slow to load.
The weather app?
No. The Weather Channel app. I'm such an old man. I have on my phone, I have Google Weather, just like a bookmark to it, and then it opens up the website, but it's like the best one.
I was 10 years old when I knew there was a Google. I didn't know Google had a standalone weather app. Man, how old
it's like not an app you can install. It's just like a bookmark
it's just
on my
it's just on the Google
screen. Yes. But it's like it gives you all the information you need right there. Like I don't know.
It's tough because this becomes, and I promise we'll talk about something worthwhile, but in the meantime, we're going to talk about the weather. The reason Ian's on, once we get through chit-chatting, is we're going to talk about what's going on in the mortgage industry, because Ian is one of the sharpest mortgage minds in the country, and I'm happy to call him a friend, and he's close by and helps a lot of our clients. But before we get into that, let's talk more about the weather, because this is really interesting to me. It's like dangerously cold. They shut down, though I didn't tell you this, they shut down, do you know where Barrelback is on Walloon?
Oh, yeah.
So where that road,
right on the bridge.
Yeah, there was zero visibility. They actually shut the road down today. So we're seeing.
I gotta believe the bridge is shut down, right?
Is the Mackinac Bridge shut down? Let's find out.
It's got. I mean, with the wind, at some point, I'm sure they're gonna close it, because isn't it? There's like a certain threshold, I think, when it's super windy.
Yeah, it's the Mackinac Bridge.
They stop letting trucks through or something. You're my Mackinac expert.
Currently, we are experiencing blowing snow in the Straits area. Oh, there's a live bridge cam. Let's see if there's people.
I'll tell you one thing I don't want to do right now is drive across the Mackinac Bridge. That sounds terrifying.
So I went across the Mackinac Bridge yesterday. We have a new listing in St. Agnes. For some reason, we've been getting a lot of Upper Peninsula business. We've like 4 or 5 listings across the bridge right now, which I'm grateful for. Yesterday was nice. Today, I don't think I would have crossed the bridge today. I think it's just, the car I drive. If I drove a semi, I'd probably be even more against it. But anyways, all right. We promised these people some useful information. I don't think they just want to hear us talk about goofy stuff all day.
The weather and the bridge.
One of the reasons I want to have you on tonight is you and I both just got back from large. Mine was national. Was your event national?
Yeah.
Okay? So if I say anything that's out of school or wrong, just stop me. But interest rates are they 1% lower than they were last year this time?
Yeah, almost exactly. So we started the year in the very high 6s, low 7s, and right now we're in the low 6s. In fact, a client of ours, I just locked today at, I think, 5.99 or 5 7/8 or something like that.
30-year fixed.
Yes, sir.
That's promising.
The mental hurdle, like you get 5.99 and 6.0, the payment difference is about 18 cents. But it's so much better sounding 5.99, right? Like to the consumer and to the loan officer, to everybody. They're like, oh yeah, something that starts with a 5.
No, I mean, like there's a reason the prices of the store are $2.99 and not $3, right?
Yeah.
Somebody
right,
determined a long time ago that psychologically 9.9 is better than an even number.
Yeah. It's funny, when we first came to this company, almost exactly 2 years ago, we're coming up on our 2-year anniversary. The company we had left, yeah, I know, right? It flew by. The company that we had come from had like 0.49 and 0.99 rates, and we came here and we didn't have it. And we're like, that's weird. So our CEO, did whatever CEOs do, and got us those rates on our rate sheets. And I kid you not, didn't swear. I kid you not. We saw an almost immediate pickup, because here's what I think it is. Like if somebody's comparing rates, if you offer them 6.49 and somebody offers them 6.50, 6.49 is lower than 6.50. I think it's just that simple,
I think where our worlds collide is not only are rates a little bit lower, but I think prices are a little bit lower. I'm certainly seeing people get better deals than they did a year ago. So a year ago, you and I were stressing because not only were rates high, prices were still incredibly high. And I think those two things created a perfect crap storm of a very tough year when prices were, prices were still high, rates were still high. A lot of the demand was slow down. I mean, I shouldn't say the demand was slowing down, but buying was slowing down. And we've talked about it 1,000 times. That was as tough as it gets.
Well, and what we saw is the demand. I would put it a different way. The demand was still there. The qualification wasn't, right? People still wanted to buy, but they just couldn't afford it. It's like, and
look, there's still a lot of demand out there. I mean, I don't know if you see this on your end, or I don't know if you're able to see it the same way we are, but we're seeing there is a ton of demand. I don't know if there's a way for you to quantify it. What is a ton of, like, is it people getting pre-approved that don't, that just don't buy right away? Like, how do you quantify demand?
I'll tell you the easiest way is, so as a lender, one of the big topics that we talk about in industry groups or with other loan officers, whatever, is the cost of credit reports. Okay. So every time we pull a credit report, when I first started in the business, I think it was, $18 or $30 or something for a credit report. All three bureaus, you could have two borrowers. It was all the same cost. I distinctly remember maybe 5 or 6 years ago, pre-pandemic, it went up to like 99, not 199. And the world was on fire. We're like, you have got to be kidding me. $99, that's insane. Today I'm at $375 for a credit report.
Wow.
Single largest line item on my P&L, because we pay for the credit report whether the loan closes or not, right? So that it's an easy way to tell if I'm pulling a lot of credit reports but not closing them. I can tell very quickly. So that's one of the things, and not just because of the cost, but what I tell my team is a pre-approval generates a lead, and a lead turns into a deal, and a deal turns into a paycheck, right? So if I see a lot of credit reports pulled and not a lot of closings from those, we can do the mental math on that and see, like, either people aren't able to find what they want, or they aren't able to qualify for what they want, because you wouldn't call a lender and try to get pre-approved if you weren't a buyer,
or and go to the point and get as far as pulling credit, because like you have to pay for it, but that's also affects their credit, right?
And to be clear, the client does not pay for the report, right? Like, and I'm not encouraging anybody from doing it, but
the ding or whatever you want to call it on their credit because you pulled their credit, right?
I can educate you on this too. So we do actually, and a lot of lenders do this, it's called a soft pull. So what a soft pull is it gives us the full report and the scores. We still got to pay for it, but it doesn't count as an inquiry for the client. Going into my loan officer spiel here, a soft pull is great because for a few reasons. Number one, at least until March or May, when the law goes into effect prohibiting it. But right now, if I pull Geno D'Angelo's credit, if I do a hard pull right now, by the time I'm done clicking the button, his phone will be ringing with other mortgage companies soliciting him. And the reason for that is the credit bureaus, Experian, Equifax, TransUnion, sell that as a lead to anyone that has the money to buy it. So hundreds of mortgage companies and scam artists and whoever will call that. So if we do a soft pull, that doesn't happen. So number one, it shields you from that. But more importantly, a lot of people don't know their timeline. They're like, I want to buy this year.
Right.
This year could mean this month, or this year could mean in December. So we don't want to keep pulling your credit and potentially impact it. So we do a soft pull, so we get all of the data we need. We can run it through the systems, but it doesn't impact or trigger anything on the buyer side.
In case somebody watching doesn't know this is valuable, it's a question I get a lot. How long does a pre-approval last for? If I call you tomorrow to get pre-approved, how long is it good for?
So the technical answer is 120 days.
Okay.
The realistic answer is 90 days, because it takes, we budget 30 days to close. So what we always tell people is your pre-approval is good for 90 days. And when I issue it, the expiration date is 90 days. And that's because we want to account for time to close. Very rarely does it happen, but we do see, we'll do a pre-approval, and if it goes, 120, 180 days, credit score could go up, credit score could go down. So we never want to put somebody in a situation where the credit report expired, or some of their, pay stub or whatever document expired, and we weren't on top of it, and they fell in love with the house and they can't get it because something changed. So we stay pretty heavily on top of that kind of stuff, especially, like I said, with the longer time horizon borrowers.
So Danielle Smith,
375 is nuts. I could not agree more.
Why did it go from, why did everybody lose their mind at $100 and now we're at 4 times that?
The industry lobby is going absolutely insane about it. Bill Pulte talks about it quite a lot. The reason why is because it can. The bureaus, Equifax, Experian, TransUnion, have an insane grip on Washington, whether it's the lobby or direct campaign contribution, who knows? But, and you can see it like when there's data breaches, the settlements are almost nothing when it's, Equifax or Experian, compared to other public companies. So politics, it sucks.
You would just think, like, with technology, that pulling credit would be easier now than it was 10 years ago.
100%. So I'll tell you, the real nuts and bolts of it are lenders. It's no secret. So like when we were at our previous company, we did not have soft pulls. And my uncle was working for a very large lender, still works for a very large lender that did have soft pulls. And I was talking to him on the phone one day and I said, Uncle Pete, we're about to get soft pulls. Isn't that cool? And he said, it'll be great for 30 days. And then the credit vendor will realize that you are buying soft pulls and they're going to triple the cost of your credit reports.
Interesting.
Why is that? Because they don't get the full fee when you do a soft pull, they get a partial fee. So essentially what happened is the credit bureaus realized that there was another product that they could lose out on money. So they jacked up prices. The president signing the ban on trigger leads is fantastic. That is great for the industry. By far, we've all screamed for it forever. But they didn't pass any legislation to prevent the credit bureaus from jacking up credit report costs. So since they're losing the revenue stream from being able to sell trigger leads, they just jack the credit report cost to the consumer up. So like I said, literally an appraisal where somebody drives to the house, walks through it, measures it, takes photos, has to prepare a 50-page report on the home, costs $500. A credit report that is instant in electronic data costs almost $400. Like that's
crazy.
Bizarre.
Bureaus
are scammers and have been for years. Daniel, I could not agree more.
Daniel, we should have you on here. He's a retort. This is your Ghost of Christmas Future.
Yeah.
Full disclosure, retired mortgage lender. Daniel, who'd you work for? I'm just genuinely curious. Love to get to know our viewers. How do you think AI is going to change? I didn't prepare you for any of these questions, so if you can't answer, you can't. Will AI change anything in lending you would think so I have a theory that, and I'm going to get roasted in the comments for this. AI almost reminds me of the QR code, where I think it's not going to be when the QR code first came out, this is a very bad analogy, but whatever. When the QR code first came out, it had like zero adoption. Now AI is having a decent amount of adoption. It doesn't, I think we're a little ways away from it completely disrupting the world. Am I wrong? I just don't think it's going to disrupt it as quickly as everybody thinks. But again, I don't know anything.
Yeah, no, I think you're right. So it's interesting. That was the central topic of what is. So I was just at a sales conference for our company, national sales conference. So we had like our CEO was there, our executive leadership team, all the way down to the owners of our company. We're privately owned. So the parent company, the owners of our company own 30 or 40 other companies, most of them mortgage and real estate industry related. And one of those is an AI company, for lack of a better description, and I would say 80% of what we covered was AI's impact on not just on our company, but on the mortgage industry. And, where we're going to see, or where we're already, so I guess I'll tell you, we have internally like a proprietary AI system that it uses like the GPT models, but it's on our own servers and it only queries our data for guidelines and stuff. So, a real life example is a year ago, if I needed a guideline, there was two ways I figured it out. Number one, I would go onto Fannie Mae's guidelines or Freddie Mac's or FHA's guideline directly and read through their PDF and find it. And if I showed you my screen, I've got them all bookmarked and I've become an expert at it. If I'm looking for a specific guideline, it probably takes me 10 to 15 minutes to find what I'm looking for, read it, digest it, summarize it, and get, my answer back to my team or whatever. Fast forward to today. We call it Sky AI, our internal AI tool. I can go in, say the exact same question, and within seconds, it gives me the full guideline, like cites it from the same source that I would pull it up, the PDF or whatever, and then summarizes it in like normal words, like easy to understand. And like I said, gives you the link also. So I've got a snapshot of the guideline, a summary of it, and a direct link to it faster than I could download the link myself. So I think that, the kind of the mantra that we're hearing and seeing a lot is, AI is not going to take our job and it's not going to replace us. AI is absolutely, people using AI absolutely are. So the earlier you adopt it, the more comfortable you get with it, the better off you're going to be. Our primary owners of our company are two brothers, and Shane is one of them. He's kind of like spearheading our AI stuff. And he said, you got to think of AI as Jeff Wagner is one of my peers here, and actually one of the fellows in Texas. He's at home wrapping his pipes right now.
I felt like that was a troll comment. I'm like, oh God.
Yeah, it is 100%. Jeff's the king of all trolls. So Shane said, you need to think of AI as a thought partner. So, it's not Google on steroids, which is how most people use it right now.
Right.
You put in something and you get something back out of AI. That's not that works, but that's not the intended, or that's not the end use. AI is ideally going to exist to make us more efficient at getting the tasks done that we're still going to be doing, and getting us the information in a much more organized and quicker manner. So yeah, I think the adoption thing is going to be tough because so many companies, especially in banking and finance, right? Like I came from Chase. I was there for 15 years. I can tell you with 1000% certainty, they are not going to implement some technology like this until it is vetted to the nth degree and 17,000 corporate attorneys and compliance people review it and comment on it. Like they're probably a decade off from doing something like that. They just don't have the agility. And not talking bad about Chase. Like obviously you're the top 3 biggest bank in the world. You have to have that kind of stuff. But I just think a lot of companies are going to be slow to adopt because it is so new. Like they want to make sure before they invest that it's something.
Is a double reverse mortgage just a mortgage?
Yes. Jeff loves the double reverse though. Although I did learn, we've got another person that we work with quite a lot in Montana. Her name's Beth, and she introduced me to the reverse 1031, which is not a reverse mortgage, but it's a 1031 where you sell the property before you do the next buy. So you get like a window. I had no idea that existed.
No, that's how most people do 1031s, no?
Or sorry, the other way around. You do the loan. Yeah.
So you buy the house and then go sell something?
Yeah, exactly. So you get the loan, buy it, and then do the 1031 after the fact to pay it off. I don't know. Mandy, my processor, processed the loan, and Beth told us all about it on one of my team calls. And I can have her recap me. I'll bring you up to speed.
To bring her on. Daniel Smith said last bank was chemical/TCF. So in Northern Michigan, it was Northwestern, then Chemical, then TCF, then Huntington. Yep. Am I missing anything?
Yep. Daniel, I had a friend of mine, actually was one of my groomsmen in my wedding. Jason Tack was at Republic Bank for quite some time. And interestingly enough, my uncle that I had referenced earlier is now an executive at Republic Bank.
What is his title? CEO?
No. He's in charge of their mortgage company. So national sales manager or something.
What was so we were both, as I mentioned earlier in the broadcast, we were both at pretty large. I was at a real estate conference in Scottsdale, Arizona, which if you have not been, these conferences are just at places and I show up. I wasn't super excited about Arizona because it's a 12-hour travel day each way from Northern Michigan. And I'm used to, Florida, that's 2.5. But Arizona was beautiful. I was there and it was like Northern Michigan in July.
Yeah.
It was great. It was beautiful. It was. I keep saying it was beautiful, but it was beautiful. I mean, the mountains and the desert. It's such a contrast to here. So, if you've never
it's a tidal wave of Porsche 911s. Like you were sending me pictures of my dad's there.
Why is it? Why? Yeah, you're a Porsche guy. You're a Porsche. You don't own a Porsche, but you're a Porsche fanatic and future Porsche owner.
Yeah.
Why are there so many Porsches there? Because they were like every nice restaurant had like 10 911s outside.
I just think it's because that's where all the money is. It's crazy.
But
so like my dad,
like a good. But I mean, I agree. But like, there's other nice cars. But they were like you see a lot of nice cars in Northern Michigan. 25% are Porsches. They were like 80% were there. So I don't know if they just some great Porsche dealership or some great salesman out there selling these things, but they were everywhere.
Yeah. So my dad's there right now. He goes out for, Barrett Jackson, Russo and Steel auctions and stuff. And he's sending me pictures of them also. And so like anyone that knows me knows I love 911s. And he probably sent me 70 photos today of 911s that he's just seen around town. Jeez Louise.
What's your target date to buy a 911? Depending on how many people call you live.
Yeah. It depends on how well this podcast goes. Okay. So you worked for different Republic Bank. Got it. So my initial target date before I bought the AMG that I have now, I was really, really thinking hard about it. The problem is that I have my kids are 9 and soon to be 13. And their legs are a little bit too long for the back seat of a 911. So unless Kate always wanted to sit in the back seat, she's the shorter of the two. It's always going to be an argument who's going wherever with dad. So the 4-door was mandatory. So I would say I probably got another 5 or 6 years before I've got kid in college and we can do a car with a tiny back seat.
Is there a long enough season to buy a $150,000 car in Northern Michigan?
I would drive
These
it
are the
year-round.
questions people want to know.
100%. I would, if I had a 911, I would buy a all-wheel drive and I would drive it year-round.
You drive in the winter?
100%. Although I say that, but like the AMG, I haven't driven since November or something because I waited too long and I didn't put the snow tires on, so now it's stranded in my garage. So
there are a lot of people. There's a guy in town that I think he's a lawyer who drives an old. I think it's a 911. I'm pretty sure it must be a 911 because it's not about. And he puts a ski rack on it and just.
Yeah.
No, I think if you're gonna. I'm a huge fan of It's one thing to buy that car and drive it 3 months, but if you can drive it 12 months, it's probably fun to drive. And I think put a ski rack on it. I think that's such a move.
It's a flex. So I've got 2 things to say about Jeff. Jeff is the guy that's getting the G-Wagon that I sent you that video.
Is that right? The blue one? The blue G-Wagon?
Yeah.
We have
Jeff, Geno is. Yeah, he's a pretty solid loan officer. Great guy too. So Jeff and I were talking about this earlier today. This is actually a great topic. And I think that this really leads into why Northern Michigan is so popular. So property tax rates. As a percentage of value of the property, what do you think is a fair number? Like 1, maybe 1.25? Yeah.
1%.
Jeff told me today, I had no idea. In Texas, they start at maybe 1.8 or 2 and go up from there. He said some areas are 3.5% of the value of the house in taxes. Insurance, 1%. So I was telling him like our numbers, my insurance, the house I'm sitting in, I think our insurance is $1,100 a year, and it's probably a $650,000 house. The equivalent in Texas, is probably $4,000. Like, so the cost of living, that you have to take it, the good and the bad. So while we might have higher cost per square foot, we have lower property taxes, lower insurance, and I think that's why we
don't income tax. They're right. I mean, they don't. That's the reason.
No state income tax. Yep.
Just like when we were in Arizona, we were at the mall across the street a couple of times. And I said I was buying clothes or whatever, and this is just how I am. But when I learned that there was 10% sales tax there, it makes it hard to buy anything at 10% sales tax. I don't care what it is.
Like I feel the Michigan sales tax has been 6 forever.
If you're buying a Porsche and you have to pay a 10% sales tax, why don't you go anywhere else and buy it?
1%. I would say 1% would be the
sales
home
tax when you register it. I guess you should. Where do you pay? So if you buy a car in Ohio, where do you pay the sales tax? You probably you pay it when you register it here.
Depends on who you buy it from, because I like pretty much every car I bought out of state. So if you buy it from a private party, you pay sales tax in the state that you transfer the title in. And if you buy it from a dealer, you'll pay sales tax at the time you buy it at whatever state it is, but the state that you register it in will give you credit. So if the tax rate is over, you're sunk. If it's under, you have to pay the difference.
Interesting.
Or that's what the dealers have explained to me. So maybe I've gotten screwed on that, but I think that's how it works.
So to get back on track, I want to hear more. So why did Jeff wrap the G-Wagon in light blue? What's the logic with that? Why was it light blue?
So he's got a black. He told me he's got a black one now, and this one is silver underneath. And he's like, I was looking at it, and just silver is kind of like blah, like they're all the same. You got a black one, a silver one. It doesn't stand out. And he's kind of a flashy dude. So he saw that blue, and he was like, that's the one. I wish I could put it on the screen. So Jeff's got the I guess I don't know if it's a G550.
Is it an AMG or is it an AMG or no?
I think it's an AMG, so it must be a 63.
Yeah.
And it's like what would you call it? Like not a baby blue, but it's like a light blue.
I would call it real. It's like color. The real, like my brokerage real. It's like their blue. So maybe he's gonna come and build it down. I don't know.
Maybe.
This conversation has been. He wants to get.
We have completely derailed.
I don't know how to add a third person, or I would bring him. So. In all seriousness, sorry, go ahead.
Oh, I was just gonna say. So, Daniel, I would say 1% homestead. Absolutely. You're probably going to see, a 20% increase or thereabouts. It's 18 mils. So probably 1.25 is a good guess for non-homestead, unless you're in like Traverse City proper, or anywhere where there's 3 tax bills, you're going to see a lot higher. But
I learned something this week that I want to mention before. Jeff says, how much does it cost to build a custom home? I'm hearing anywhere from $700 a square foot and up. It's expensive. There's a really good, and we're going to have them on the stream soon. There's a really good builder above me, Glenwood. Look them up, Glenwood Homes. They build beautiful homes, and they told me last summer, maybe 2 summers ago now, that they had 5 homes they were building that were $1,000 per square foot, and they were all over budget. So you'll see some middle of the road homes being built here, but most of the homes you're seeing built in Traverse City, Petoskey, the nicer areas are $5 million plus. I mean, that's what I'm seeing.
Yeah,
I mean,
100%.
Because it's too much. This is just my opinion. It's so expensive to build that it almost has to be like, this is it. Like, you just had a windfall, or you've saved your whole life, or you just sold your 2 G wagons or whatever. But it's just expensive, and otherwise people are just buying already constructed. And not only is it expensive, it's like booking 2 years out. So we're definitely going to have the owner of Glenwood on here in the next couple of weeks to weigh in more on that. So I did hear something. I don't know if I haven't told you this yet. I don't know if you knew this. So I sold a condo. There's a condo development on Burnt Lake over at Indian River that burned down. It was like 2 buildings. One of the buildings burned down. They rebuilt, and I helped one of the owners sell their condo. And then he was like sort of in charge. But I learned that if something burns down and you build it back and it's over 5% bigger than what it was before, the property taxes become uncapped.
Oh, I did not know that. That's tough.
Property taxes like triple.
So the property tax cap in Michigan, talking to people from across the country in the last few years, I've learned that's like the way that we calculate taxes is positively bizarre.
How does everybody else do it?
Usually it's based on sale price. Like whatever, like a percentage of whatever the house sells for. Whereas ours is like an aggregate average of all of the sales in that municipality.
There's no logic. There's no math. I mean, there's math, but there's no like if I buy a house, I don't know what the taxes are going to be. I know what the most they can be. The SEV multiplied by the millage rate. That's the most they can be. But it usually doesn't go that high. And we calculated it, or we tracked it. And it's based on usually about 70% of the new price. So you're still getting a pretty good discount.
And that's, and historically, like you would say like, well, half of the sale price, so there's a lot of sort of flex in there. What's weird to me is when they reassess, and most of our municipalities are in arrears. So like if you buy a house in 25, it's not reassessed until 26, and you don't see it in your mortgage statement until the middle of 2027. So like it's such a weird way that we do property taxes in Michigan.
How often, I know somebody very close to us that this happened to. How often do people miscalculate their escrow for property tax?
So that one was the most extreme that you're referring to. I've never seen one like that. Like, we were off by like 50%. I tell every customer we deal with, like, we're going to guess at what your future taxes will be. And you're either going to get a check back at the end of the year, or you're going to get a letter that says that you just have to send some money in because there's a shortage. We'll do our best, but there is no real science to it because the assessors don't release their formula. And even if they did, it wouldn't matter because they use the data from the whole year, and you're buying in May, or, so it's just a weird system, but I would say, like, where we see issue is if somebody's owned their house for a really long time, because you hit the cap. So when we talk about the property tax cap in Michigan, by a lot, right? So the property tax cap in Michigan says that your taxes cannot increase by the lesser of 5% or whatever the inflation rate is on some specific day. Right. So, when inflation was 0 or nothing for so long, taxes were locked, and then you saw 20% appreciation, but you could only hit 5%, or at that time, inflation rate might have been 2.5 or 3. So it didn't quite line up. And then we saw inflation jump up a ton, and then stuff was starting to hit the caps, and then assessors realized, like, oh, we can reassess. And so, the last couple of years have been wild for property taxes in Michigan, but God willing, we won't go through that again.
But so let's talk about this. In the last 5 years since COVID, or whatever it's been, 5 years now, A lot of properties have sold for record prices, meaning some of these properties that have been out there forever became uncapped. So I'm not trying to start a fight with anybody, or I'm genuinely curious. What are these municipalities doing with the extra money? Why don't they all just have wild surpluses, or do they? I mean, I live in an area, Emmett County, tons of money. They take good care of our roads. I don't know the budget, the balance sheet, anything like that. But am I wrong in thinking, or do you ever think this, that these municipalities have to have way more money than they're used to? And if they do, what are they doing with it?
It's an interesting topic. And somebody we know, I'll tell you offline, I don't want to put this person out, is on the board or whatever, the assessing board for the township that I live in. So I was asking her these questions, and she said, the reality is there was such a long stretch where tax rates couldn't increase.
Yeah.
That most municipalities were already running either a deficit or right on the dollar. And that's why you would see another really common thing, especially in northern Michigan, were special assessment districts. So like if you live in a neighborhood and the road is really bad, the municipality didn't have enough money to pay to replace the road, so they could assess the home. You'd vote on it, but they essentially would say like, all right, if everybody pays $5,000 a year or $5,000 total over the next 5 years, we can replace the road, that kind of thing. So essentially that was sort of like the Band-Aid to account for the lack of their ability. So now they're basically just catching up. So they've refilled the coffers, and now they're going through projects that have been slated, but that they couldn't afford. Is the government speaking for it? And that makes sense. I mean, when you think about it.
Yeah. I mean, I just always felt like, I mean, there's probably this data probably exists, but Grand Traverse County, Emmett County, I mean, they've got to just be flush with money, but maybe, look, we have good schools and they do. I'm happy to live that. So
you will never hear me say, I think any government anywhere is doing good with our money. They take too much of it and they do stupid things with it, but that's a different topic for a different day.
So switch gears a little bit. Jeff, I am a real estate broker in northern Michigan. What I do is generate buyers to send to Ian.
So I was on the phone with Jeff and another guy on our team right before this, and I said, all right, I got to end this because I got to get ready for this podcast I'm going to be on. And he's like, send me the link. I want to watch it. So I sent him the link, but I gave him no information on what we talk about or really anything. So
we'll be okay. So I was at this conference, realtors around the country. It feels like the sentiment is better. I think the worst is behind us from a market standpoint. I do think we are finding a much more balanced market, which I have sellers now that are, they probably missed the window a little bit. It's tough. And it's something that, it's a conversation, and I feel for people, but it's hard because human psychology is its own thing. And, if you'd have told a lot of these sellers 5 years ago what their house would be worth, or 10 years ago what their house would be worth today, they'd have been jumping for joy. But now I do get a little bit of them feeling like they missed the boat, and which is understandable, but, you're still going to get more than you would have for your house 10 years ago. You're not going to get as much as you would have 3 years ago. And that's just the fact of the matter. And we are seeing some people, I don't know if you see this a lot from your end. I'm seeing people buy and sell houses, like buy a house and sell it a lot quicker than they used to. And I don't know what the reason behind that. There's a lot of people who bought their house in 2020, which I think is in my opinion, was the absolute top of the market. And now they're trying to sell it and it's not going as well. So, that's definitely something we're contending with. So are you seeing anything like that on your end?
Yeah, for sure. Well, especially since we work with a lot of the same people. But
for sure.
I think what is happening, especially with the people that bought, during or right after the pandemic, is I compare this to my dog. We had no dog during the pandemic. Our dog had passed away, and we're like, we need a dog. And we got a dog during the pandemic, and I love him. He's great. I don't know that I would have gotten a dog had there not been a pandemic, right? I think that's kind of the way a lot of people feel about their house. They're like, the things that I thought that I needed.
I think that's how they feel about a lot of the decisions they made during the pandemic.
Yeah. But it's like when you're locked in your house for 8 months, you're like, I need this, this, and this in my house. And then when things go back to normal, you're like, I guess I didn't really need that. I kind of wanted what I used to have, or, whatever. Here's another thing I think is interesting. And we were experiencing it real time with a buyer right now. A year or a couple years ago or whatever, number one, if you had a contingent offer, no one would consider it.
Right.
Hard stop. You were not buying a house if you were contingent. So we had a buyer that was contingent and lost out on the house that they wanted to buy and was almost immediately able to find the next one. That entire scenario would have never played out even a year ago.
I think it's easier to buy a house now than it's been in a long time.
So much easier. Like there's more options. And you know, for this person too, like the house that they ended up getting, the second house, I think is probably a better fit for them, right? Like, so it ended up working out for the best, but like the availability of inventory is definitely freeing up. It's definitely getting better, I think.
And I think, look, that too. And I think the seller's a little bit more motivated. We had a client today that, you know, I'm not talking about anything specific, but this is a true story. Had the inspection, some things came up. They wrote a $3,500 repair at like a repair. I'm like, there's no way they're going to take it, and they took it. And so it is. I'm telling you, if you're watching this and you've been thinking about buying, or 2026 is the year you're going to buy. If it's the best time to buy is when you're ready to buy. If the stars align and you happen to be ready this year, at least leading up. I don't know what's going to happen this spring. I think there's a chance we could go back to a little bit of a feeding frenzy because I still think there's a ton of demand. I think you're going to see rates are going to continue to go down, inventory is going to go up. So I think there's going to be a little bit of a feeding frenzy. But right now, specifically when it's 20 below, there's not a lot of people coming to Northern Michigan. So if you brave through this, not that you should go, don't call me or anybody to look at houses tomorrow. Stay inside your house, stay warm. Don't go look at houses tomorrow. But when the weather lets up a little bit and you can get out, this is a great time of year to start looking at houses because there are some absolute values out there.
I think, 100%. I think another thing that we're starting to see is, you know, the lockup or the lock-in effect is starting to ease as rates come down, but people are definitely less sensitive to losing that 3% that they have on their current house or whatever. I wish I would have taken a picture of the slide, but we just had Dr. Lawrence Yoon, chief economist from National Association of Realtors. He just spoke in Traverse City at a Women's Council of Realtors luncheon. For those of you that don't know, I'm the treasurer for the Northern Michigan Women's Council of Realtors. I am not a woman, but you know, they elected the right man for the job. So, so we had Lawrence Yoon, and he was sharing, you know, statistics, and it was something like, I don't want to misquote it, but it was like at the height, you know, 75% of people had a mortgage rate under 4% or some crazy number like that. Now it's like 60% are under 5, or it was way smaller, or under 4. It's like a huge improvement. So part of that is more people taking out loans over the last couple of years. Right. The other part is people are refinancing out of or selling those loans or houses with the loans with the really low rates. And that, I think, is going to clear some of that logjam up too.
On a more negative note, and I prefer to be positive, but I wouldn't be doing my audience justice if I didn't ask this. At the same time, you're hearing a lot of reports about, you know, debt being at an all-time high, car loans, all this. How do you think that plays in? Is it a big deal? Is it a bigger deal that we talk about, smaller deal, or no deal? What are your thoughts on that side of things?
I think it's interesting that the mainstream media is just now starting to talk about it. I think, you know, on the outskirts and the less, you know, whatever, the people that really digest and dive into the data and the whack jobs on Twitter, as you know, they're often referred to, have been saying it for like 2 years. And when you look at it, like the St. Louis Fed publishes this data every single month, and you can see like during the pandemic, savings were at an all-time high. Literally, like they'd never been higher. Personal savings and credit card debt was at an all-time low. Right. And now it's completely flipped. Consumer debt is at an all-time high, and savings is at an all-time low. And that's obviously a lot going on there, but people had a bunch of free money from the pandemic, which caused inflation. So it's kind of like the 1-2 punch. So people are dipping into their savings first to keep living the lifestyle that they grew accustomed to. And then when money was free or cheap, and then people are also like not willing to adapt and cut back on that spending. So then they start going into the credit cards, and it's an interesting observation on, you know, human psychology, but it's a real thing. Like I can't remember the last time we pulled a credit report where there wasn't some sort of outstanding, you know, like debt that usually you'll see somebody and they'll be like, oh, I have an 800 credit score and I have no debt. And you pull it and there's literally like their mortgage and that's it. Now it's like every single person has, you know, $5,000 on an Amex somewhere or something to that effect.
Is that right?
Yeah.
Do we have as a country, do we have a spending problem?
Yes, 100%. I mean, and it starts from the top, right? Like I'm not huge on talking politics, but like regardless of where you fall, Republican, Democrat, doesn't matter. They all spend too much money. Like the country spends too much, and then us individually too, right? Like I didn't need to buy this cup, but I did.
I don't know what I just did. Sorry. No, I agree.
This is a dope cup though, isn't it?
It is. Where'd you get it from?
It was Hobby Lobby, and I think the price tag's
nice.
still on it. It was actually one of the gifts I gave my wife for Christmas.
And you're using it yourself?
Yeah, 100%.
One of the things, coffee cups are one of those things. I don't know why, but I find joy in them. Amber got me a coffee cup for Christmas that has, it's like the cup is like the Highlands, and like all the runs are like on it. So it's like a map of the Highlands.
Yeah.
Cool. I think
That's
it's super
sweet.
cool. I'm sure it was $45.
My wife says the same thing. She's like, I like coffee cups. They're all different. We don't have, which is interesting because my wife, like this room is perfectly indicative of how my wife would have everything, which is absolutely nothing in it. Like she hates trinkets and knickknacks and stuff. Everything has a place, except for coffee cups. She likes the most random wild coffee cups. Ooh, Jeff's got a good question here too. How is the second home activity in your area? This is an incredible.
Yeah, go ahead. You answer it.
Yeah, I was going to say this is like an incredible topic because so I've lived here for about 14 years, and for like 12 of those 14 years, second homes was a massive part of our business. Mm-hmm. And then it kind of got stifled a little bit, with the influx of short-term rentals and stuff. It just made it a lot harder to buy a second home because whatever, the demand was there. I think it's slowly starting to return. We talked to a guy today. I talked to a guy today, that's looking at buying a second home. And he's from California. And he's like, we're going to retire in the next 5 years or something, and we want to be in Northern Michigan. So I think that we're starting to see some light, but yeah, you're the realtor. We're like, and there was a lot that impacted second homes too, right? Like the previous administration had previously second homes would price just like a primary residence, and now they price like an investment property. So that hurt buying power quite a bit.
From the realtor standpoint, I would say the second home waterfront in the premier areas, whether it's Torch, Harbor Springs, Little Traverse Bay, Walloon, wherever, has gotten incredibly expensive. Like I like realized this, and I had to tell a client this last summer, and it surprised me. The entry level for waterfront in Harbor Springs is $5 million, and that's just incredible. Like that I think that qualifies. There was a stretch last year. The Cranes Detroit, which is like a business publication in Detroit, posted that there was like a week last year where Walloon Lake had the highest waterfront sales price in the entire country. This area is the high end in this area is becoming very high. And it's weird. It's like, I think that the second home market is very similar in a different way to the primary home market, in the sense of there is a generation of people that were saving their money, that want to buy a waterfront home in Northern Michigan. Back when you could buy a waterfront home for $1 million, and now that same house is, Burt Lake entry level used to be $1 million for a nice house. Now it's $3 million. Lake Charlotte Lake is $3 million. Now it's $5 million, and there's just a difference between 1 and 3 million.
In scaling it down, like looking at Torch, which is a huge lake, right? I think it's the second largest inland lake. It's beautiful historically. In fact, so like my wife's grandpa built their house on Torch Lake 65 years ago or something like that. He was a doctor, a dentist, and my wife's mom, so my kid's grandparent, weird way to put it, my wife's mom would always tell the story that all of his buddies would tease him that he bought on Torch Lake because Torch was kind of like the trashy lake, and they were all on Mullet and Burt. And now it's like, obviously Torch is beyond gorgeous, and we spend every waking moment there. But I remember when $1 million got you something on Torch, like you could get a small house with a lot of frontage, or a big house with a decent lot. I
remember selling houses on Walloon for $1 million 6 years ago, and now they're way more than that. It's crazy. So I don't know. In Northern Michigan, everywhere else, but I think Northern Michigan is just such an interesting place because there's only so much of it here. Before we hopped on tonight, I've talked about this before, but it seems like it's getting closer. The Traverse City Airport, this is something we're not talking enough about, but they're about to do a $120 million renovation addition, whatever they want to call it. I think the Traverse City Airport is the linchpin of why Northern Michigan is what it is, because it's a lot easier to get here. And I travel quite a bit, and it's a lot easier to fly out of Traverse City than it once was. I mean, you're probably always going to get a layover, but it seems like every year there's more and more flights, and they've done a really good job in the summer, which is when most people come back and forth. But if they do that 120, whatever that looks like, or whatever addition they're going to put on, if that airport becomes more of an airport, you're going to see this area explode even more. That's my opinion. I'd love to hear your thoughts on that, but I think the airport is the big thing.
100%. So again, like to reference the Lawrence Yun thing. So I don't think he talked about it when he was speaking to the group, but I had the opportunity to have breakfast with him, and that exact topic came up. And he said, you know, what's interesting? He said, I bet you if you pull up the data for where flights originate from, right, I bet if you cross-reference that with second home and investment property buyers, you will see a direct correlation. And absolutely. A realtor that was in fact, the same realtor that I know that's in that assessor position, she's like, yeah, that you're exactly right. I did that, which is interesting, right? Like, you wouldn't think something so simple where you're like, there's an airport or a direct flight from A to B. I mean, duh, obviously that should result in more real estate sales, because if it's easier to get to, you're more apt to go there, right? Like,
yeah, I mean, that's always been the complaint. I mean, I've told the story 100 times, but early in my career, you know, when we were selling Burnt Lake or Mullet Lake, it was always people from Metro Detroit, just because it was 3-4 hours away, you know, sometimes Ohio, whatever. Now it's, you know, people are buying houses in Bay Harbor from Seattle, Washington, or much further away because they can get here easier.
Isn't that interesting? So like, when I met my wife, I'd been to Traverse City once with a buddy to, like, he had bought a car and we're like, yeah, I'll go with you. I'll ride, and, you know, whatever, like a race car. And that was the only time. Like, I'd never been here for vacation or anything like that. And the airport, when I came with my buddy, you know, like, we drove past it. We were picking up the car right there, and you wouldn't know there was an airport there. Like, it existed, obviously, but like no real signage. It wasn't a thing. And they probably had no real major flights or anything like that. Fast forward 20 years later, I live here and I'm like, oh, wow. Yeah. Like, the airport actually is like kind of a hub. You know, like, if you're flying anywhere, like, you're driving to Traverse City to fly, you know, 9 times out of 10. And the further we get into it, it's like, I feel like every year we see the headline where it's like, oh, we're adding a direct flight to, you know, from wherever. Like you said, I think it was like Pittsburgh or something like that during the summer. It's very seasonal.
And it's affordable. Look, there's 2 airports. There's an airport by me called the Pellston Airport, which is small. It's super. It's just not convenient. They have free parking though, which is nice. I mean, I used to fly from Detroit most of the time back like 10 years ago, but now I'm always flying for Traverse City just because it's cheap. They do a good job. You get in and out of security. It's usually, I always check the difference between Traverse City and Detroit is not typically, unless you have 50 people with you, worth driving to Detroit. So I don't know.
Like, our team, like, all of us flew to Nashville, and it was like,
was it direct?
No, we had a layover in Detroit, which I feel like I think you had said this earlier, like, you're going to have a layover most of the time. Like, we don't have a direct flight to Nashville, right? But it was like, I think $280 or something all in, like taxes and everything. Like, how do you, like, that's crazy.
I feel like Nashville's close enough. That almost should be direct. Nashville's not that much further than Chicago, if you look at it.
It was, by driving it for sure is. So, like, well, maybe not. I guess, I don't know. I know some people from Indianapolis that were at the same meeting, and they drove, and they said it was about a 6-hour drive. So for me to drive from here to Indianapolis, it's 6 hours, and then they had 6 hours, but I don't know if that's direct. So that I might be thinking of that.
I was wildly wrong. I'm just looking at a map. I don't know what I was thinking. Nashville's a lot further than Chicago.
Here's a weird thing about Nashville. It's in the central time zone. Like, it's almost directly south of us, but it's an hour different. Who would have thought?
I've never been to Nashville. There's a conference coming up there that I might go to, but
I was texting Laura during it.
Did you like it or not? We haven't even talked about it. Did you like Nashville?
Oh my God. I loved it. Number one, I love music. It doesn't matter what kind of music, I love it all. So, like, Country Music Hall of Fame is in downtown Nashville, and part of our event was a company trip to the Hall of Fame. Super cool, really good. The best part about Nashville, there's 2 things. There's three of my favorite parts about Nashville. Number one, it is like, I might have, I don't know.
No, it is appropriate.
Oh yeah, all three of them. Yeah,
Okay.
all three of them are appropriate.
Yeah,
In fact, they're all very family friendly. Number one, it's like dog city USA. Everyone is walking around with a dog. Like so much so that like we're in the hotel lobby and one of the people I was with was asked the concierge, like, is there like a dog show or something going on? There's like dogs everywhere. And they're like, no, it's just how the town is. Super cool. I love dogs. Second thing, people take their kids everywhere. Like you go into, I guess this is the third thing. If you go on the main drag, I forget what the street is like.
Broadway.
Broadway, yeah. You go down Broadway. Every single restaurant and bar has live music in it, which I love. And every single one has families in it.
Oh, that's cool.
So it's not like a go get hammered and you're drinking and stuff. I mean, some people, there's, bachelorette parties and that kind of stuff, but there's kids everywhere. So I like texted my wife. I'm like, this place is actually like incredible. Just the music is great. The atmosphere, the vibe. For whatever reason, it was freezing freaking cold when we were there. It was like 20 degrees. So we brought Northern Michigan weather with us.
That's awesome.
Outside of that, it was fantastic. I was like, we have to plan a family trip here. It was so fun.
Let's go together. Do you like country music?
Yeah, we should. What is it? Do
you like country music?
I love it. I don't like modern country music.
Really?
You sent me a couple of songs, and I'm like, this is terrible.
I love. Who's your favorite country music artist?
Oh my God! I wish Kate would walk in right now. She'll tell you, but it's Hank Williams Jr. I love that guy. He's a freaking legend. But I'm like Hank Williams Jr., Jerry Reed. Like I like old Don Williams.
What's the difference between the new in your opinion? Why don't you like the new stuff?
It's all like kind of. Yeah, it's like depressing sounding. They're all kind of like whiny, and I don't know. Like I like the like my dog is here and I drank a beer. Like that. That's kind of my thing.
That's funny.
In fact, it might take me a minute, but Kate, my 9-year-old, so she says, Dad, when you're at the Country Music Hall of Fame, if you happen to run into Hank Williams Jr., you got to get a picture with him.
Is he still alive?
Right. Yeah, he's like 70 something. And I'm like, oh, all right. If he happens to be at the Country Music Hall of Fame, I 100% will get a photo of him, with him. So he wasn't there live, but I did get my picture with his induction to the Country Music Hall of Fame. So that was the closest I got to hanging out with Hank Williams Jr.
I love country music. I like the new stuff. I'm gonna on the way home tonight. I'm gonna listen to some Hank Williams just for you. I think country music is very Northern Michigan. I feel like as I get older, I'm less, Gucci shoes and dress pants, and I'm more like I bought these. I told you my boot story in Arizona, right?
No.
I'll put it on the record. So
the event I was
what? Not really. So the event I was at they do a welcome party called Boots and Bling, and I'm there for a week, and I have to bring like 5 suits and like a crazy amount of clothes, and I don't own any boots or bling. Like I'm not like a country guy. Like I've got some boots I wear when we go 4-wheeling. So there's this really cool mall across from the hotel called Kierland Commons. And I guess it's pretty popular in Scottsdale. It's like this huge outdoor mall. There's like, 15 solid restaurants there. So I was with a friend and we were walking, and there's this store called Tecovas, Tecovas. And the only reason I know this is a wild ride, so hang in there. So the only reason I know Tecovas is Dan Campbell, who coaches the Lions, was walking into a game one time, and there's a picture of him, and he was holding this leather briefcase. And I've wanted a leather briefcase, but I don't want Shinola. I don't know. I just haven't found the right one. I feel like it's either you buy the like $5,000 Ralph Lauren one or like the $50 one from Amazon. So I've just haven't bought one, but I'm like, what is this brand? So I just filed it away in my brain, never thought about it again, whatever. So we're in there and I see the store. So I walk in and I'm like, not cowboy boots guy. Like I'm not really that guy. I'm like loafers.
I need cowboy boot Crocs. Have you seen these? Yeah. That's what I need. Yeah.
So I'm in the store and I got this salesperson was a better salesperson than I am. She was, she like tried on the boots. The pair I had, they didn't fit. There was this other pair that I kind of liked, but I'm like, I don't really want to, and they were expensive-ish. I'm like, I don't want to impulsively buy these boots just for this party that I'm never going to wear again. Yeah. And I had to get them home, and it's like this whole thing. So I'm like walking out the door, and in the corner of the door, there's like this mannequin that has this pearl snap green shirt that I like. I'm like, oh, I should try this on. So I tried on. I'm like, I like this. I need the t-shirt under it. And then I'm like, well, I didn't bring any jeans with me because I wasn't planning on dressing like a cowboy.
So you already opened Pandora's box.
And then I bought
rolling down the hill.
So I bought the boots, the jeans, the shirt, and the other shirt. And so I do this trick in the wintertime where I wear like Sorel boots when I'm outside, and then I just leave like my summer shoes inside, and I do the Mr. Rogers shoe swap.
Yeah.
That way I'm wearing like Sorel schlepping, snow around my office, and I'm not wearing nice shoes in the 20 below weather. So I've been wearing.
I think that's a standard Northern Michigan practice.
Yeah, for sure.
If you work in an office, you have your outside shoes and your inside shoes.
Yeah, for sure. So I've been wearing them every day at the office. They zip up on the side. I'll show them to you sometime. But I like them, and I think maybe I'm going to be a boot guy this year. So I know that was a wild story that has nothing to do with anything we talked about tonight. We think we lost like 4 viewers during. That's okay.
I'll tell.
If you're watching this
I've got
replay,
one last anecdote for you.
Yeah.
Oh, sorry.
No, go ahead.
So I was in Nashville for 5 days or however long I was there. I packed everything I took in a backpack. That includes an iPad and a computer and the charger and all of my clothes. So that's how I travel.
I feel
no
like
5 streets for this guy.
I feel like you and I travel so differently. What hotel do you stay at? Do you stay at like the cheapest hotel, or are you a nice hotel guy or a cheap? You gotta be a cheap hotel guy.
So this was a corporate thing, so they booked it. We stayed at the Thompson, which was fantastic.
I stayed at the Thompson in Chicago once, and that's as nice as it gets.
Floor to ceiling windows, it was
the Thompson frames are very nice.
Yeah. I can't imagine how much this event cost the company, but I'm grateful that they did it. I will say the one thing I'm incredibly frugal with most things. There's 2 things that I spend money on, and 3 things: my kids, my cars, and hotels. So like I love cars, obviously. So though we spare no expense on that. The kids I can't say no to because I'm a pushover, and my wife I guess also. But hotels and flights. Like I won't take cheap, crappy flights. Like if I'm traveling or if I'm in a hotel, I didn't this time. Do
you?
I did upgrade. I have before. It depends. Like first class from Traverse City is tough. Like for my $300 flight this time, it was a $600 upgrade for first class. I'm like, well, that's ridiculous. But I did like the next. So I'm like,
would you fly Delta?
See first class. What is it?
Did you fly Delta or something else?
Delta.
I've never flown first class.
Yeah.
I fly a lot. I like nice stuff. It's always that. Like when I went to Phoenix, usually I'm rarely flying by myself anymore. So when I went to Phoenix, I'm like, I'm flying by myself. I'm going to upgrade. I'm going to be there for a week. I'm going to get there rested. I'm going to come home rested. But it was like, I think my ticket was like $700. And then the first class upgrade was like $2,000 extra.
Yeah.
And I'm like, who does this?
Yeah.
But I did hear this. We're going all over the place with this tonight. So if you're watching live or the replay, drop a comment. Let me know. Do you like the chasing our tail approach or the more structured approach?
Stream of consciousness.
Yeah, so I've had the American Express. This is not a flex, but I've had the American Express Platinum card forever because I thought it was the best travel card. I've heard the Delta, if you fly Delta a lot, the Delta American Express Reserve, which is the purple card, is like, you're like the first person to get free upgrades. There's like a ton of benefits. So I might be switching to that because a lot of people at the conference I was at had that card and they were like, oh, I just got upgraded. Or, oh, like I always get upgraded to first class. Like I've never flown I've never paid for first class. And I'm like, well, if that's the case, then sign me up for that.
It's got to be something like that. Like
100%,
the cost is
100%.
prohibitive because somebody else has booked it. Like there's some relationship with a credit card company or whatever. Like, yeah. But yeah, so hotels I will not skimp on. Like I've stayed in too many crappy hotels to, that's like when I do this road trip with my dad every year where we go, it's called Hot Rod Power Tour. So it's 6,000 people go to 5 cities and there's a car show in each one. It's a fantastic time. And back, when the mortgage business was booming, I would have my assistant book up my hotels. And my one rule is like the hotel can't be awful and it has to have a restaurant in it. She's like, do you eat in a hotel restaurant? I was like, no, but if a hotel has a restaurant in it, chances are it's not crappy, right? Like, when have you ever been to a dive hotel that had a restaurant? So that was kind of like my barometer.
My thing with my assistant is no more 6 a.m. flights, which that is the downside. It's not all rainbows and sunny beaches up here. The problem with flying in and out of Traverse City, we're fortunate to have it, but every time you're either leaving, usually both. You're usually leaving super early and getting back super late. I feel like I don't think I've ever arrived at the Traverse City Airport like during the day. It's always like the guards at the gate waiting to close security because we're coming through.
We've had multiple times I've had where you leave at just the butt crack of dawn, like before security gets set up.
Yeah.
And I've had them like look at me and they'll be like, you're good. And just wave you through. Like the thing isn't booted up yet or whatever. And say like when we got back this time, we got back at like midnight or something. And it was 1 degree.
I can tell you this. The Traverse City Airport opens at 4 a.m. And I know that because I've been there at 3:55 a.m. waiting. All right, we're over an hour, which is way longer than I thought I'd keep you, so I apologize for that. Before I let you go, what are you and your kids doing tomorrow when it's 30 below? They're going to be stuck at home, staying inside. You're not leaving the house, right?
I don't think so. I mean, I talked to the team and I'm like, is anybody coming in? Like, I don't expect you to. If you want to, great, but I don't want to go outside when it's negative 30 and the Jeep needs gas. So like, I'm not going to stand outside of the gas pump. So I'm probably going to be sitting right here. I have a pretty full day. So sadly, I think the kids are going to be left to their own devices or maybe bothering Laura. But yeah. What about you?
You're a car guy. I'll answer your question, but ask me this. Yeah. Is it bad to let your car have no fuel when it's this cold out? Is that a myth?
I'm sure it can't be good, right?
I heard it's bad because there's a lot of water in it and it freezes. I don't know anything.
Yeah, ethanol sucks the moisture out of the air, and there's ethanol in pretty much every fuel that we have, unless you buy like rec fuel or something. So I'm sure that's a thing. I mean, it's got like a quarter of a tank, and it's a new car.
So okay, sure, not that. I have a call at 9 that I've got to be in this office for, and then I've got a closing at noon, and then I think so. This is a shameless plug. If you've watched me for this long tonight, follow me, Geno D'Angelo Realtor on Instagram. I'm going to do a day in the life of me when it's the coldest day of the year. So I think I'm just going to drive around and document it. People seem to love the like behind the scenes stuff, so that's what I'm going to do. Follow me on Instagram. Geno D'Angelo Realtor. I put a reel out tonight about the record temperature and the exploding trees, and we've been doing a lot of stuff with that. So follow me along.
Oh, Mary says my husband says it freezes if it gets too low. Maybe I should go put gas in my car tonight.
I've heard that, Mary. That's what I'm talking about. I asked Ian because he's the car guru. I've heard that.
Yeah.
This is what you don't want.
Now I'm like, I literally am probably going to go put gas in it.
We got to Google that after this. So Mary's, I appreciate that. We've talked about. So I'm in the market to buy a new vehicle, which is always. And I drive so much. I like the gas mileage of diesel. But
preface this: he's been in the market for a new vehicle for 6 years.
Ever. Yeah. Anyways, there's just too many to pick from, and they're too expensive. This is when you have to plug diesel trucks in, right? Like if you have a diesel truck, it's got to go
100%.
plugged in.
So like that I know. Like the fuel gels, like it turns back into a solid basically, and then it won't do anything.
That sounds like an absolute nightmare if that happens.
I can't believe it's good. No,
because you don't just thaw it, but that has to like break down the like molecular makeup of the fuel.
I think so. And with diesel, another really weird thing is like a gas car. If you run it out of gas, you just put more gas in it, and the fuel injectors spit the fuel into the motor, and it runs. Diesel, if you run it straight out of gas, like if it dies from running out of gas, it's like a procedure to get it back going.
Is that right?
Yeah, like the way the fuel injection works, I guess, is a lot different, and it's like a mechanical fuel pump. So like most of the time, like you have to take it to a shop, and they have to like prime the system, and it's like a huge thing.
Mary said Meyer gas is trash. Do you ever gas from Meyer?
I have a fun story about that. So over the summer, the AMG was broken for quite some time, and the reason was because I got E85. So that my Mercedes is modified. Pretty heavily modified. It has an aftermarket fuel system so that we can run E85 fuel. E85 fuel is like 110 octane. So you get a lot more power out of it. I got Meyer gas in Indianapolis at the beginning of this event, the Hot Rod Power Tour that I was talking about. The gas was so dirty that it clogged up 2 of our injectors and whatever. The car ran awful. I ended up having a trailer at home after the event. And it took us 3 months to figure out what was wrong with it. We had to replace every part of the fuel system. I will not buy, at least E85, I won't buy from Meyer.
That's the truth. Great. Meyer has bad gas.
Yeah, 100%.
You're saying on the record, which is tough because I just learned this. I do the M-Perks, which is like the Meyer rewards, and the best use of the rewards is on the gas, but now I can't because I don't need my car to blow up.
I mean, so like I don't know why.
Where does anybody get their gas from? Where does Meyer get their gas from?
I don't know. So like I go Shell all the time. Like the tricky thing in Northern Michigan is E85. If you want to run E85, they only sell it at Meyer.
Oh, is that right?
Yeah, like if you go other places, like other, downstate or other states, there's
Is Shell
plenty of
really the
it,
best
but
place to get gas? I've heard from car people that Shell is the best gas.
I have no scientific data other than I've never had a fuel system issue running Shell gas, and that's what I put in all the
Their
cars.
marketing is great. They do that weird thing where like they show you like what's in the gas that nobody actually knows.
Yeah,
But
invigorate.
in my mind, Shell's the best gas, and I have no way to know that besides they've convinced me that their gas is the best gas.
Yeah, they've spent enough on marketing to make it make sense in my head. They're like the Kleenex for the Q-tip.
You won't take the Jeep out tomorrow in the 30 below weather. You might have to now to get gas.
Yeah, I mean, let's be honest. Like if my buddies text me and they're like, "We're going 2-tracking," it's got heated seats and steering wheel, so like I'll be out 2-tracking with them. But yeah, like,
is it dangerous though? The second something goes wrong, this is my problem with tomorrow. I think it's okay to go out, and I'm not going to go far, but I mean I've got to go to a closing because that's service. But if something happens, you went from like this is funny to like this is very dangerous quickly. Like you can't just stand outside when it's 30 below.
Yeah, so like the last time we went out, so my Jeep is pretty much stock, right? Like it's a Sahara, but it has Rubicon suspension and tires, nothing else. The guys I go out with have these like concocted machines, like huge tires and stuff. So like we go on some pretty gnarly trails and stuff, and like I'll frequently get stuck, but I'm like I have no limit. So like we get out. I got the Jeep stuck like down a hill, sideways, whatever. It took 2 other trucks to pull me out, and it took 2 hours. But it was like 15 degrees. So like you've got a coat on and some gloves, you're fine. If it's negative
15 degrees, 30, we ski 15 degrees ski is fine.
If it's negative 30, like we're leaving the car there and hoping it doesn't freeze into the ground around it, right? Like that's
crazy. What's gonna all right? Before I let you go, what's gonna happen? What's the rest of this year like? Give us some positive message to send us into the weekend.
I think it's gonna be a great year. I think if you're a buyer, I think you're gonna have a lot of options. I think if you're a seller, you're going to have more options, or you're going to have more opportunities. I think that from a lender standpoint, as rates come down, I guess it's a deep topic and a long answer, but for the longest time, for like the last 3 years, we lost the ability to refi anybody. And as a loan officer, we focus on purchase and working with realtors, so if you're doing 5, 6, 7 purchases a month, that's great. But you would always have 2, 3, 4 refis to round out your pipeline. When you take away, 30, 40% of your business, that's tough. So I think, for us, that makes the business a little bit better. And, what we see is that refi is a crucial part of keeping costs down for everybody. So business scales. So when we do more business, it allows us to spread the cost around a little bit. So it's lower for each individual. So, I think as rates come down, we'll start to see other things ease a little bit. And I think the whole process gets a lot easier as you start to add a little bit of activity to it.
Totally agree. I really appreciate you being on as always. You are my best friends, and I tell people this all the time. You are as sharp as it gets in the morning. You know things that I don't know about.
And Squishmallow 260 is my daughter, so I got to give her a shout out. I love you, Cater.
Glad she's watching. I'll say this. Yeah. Who you work with now matters, specifically in mortgage. I just sent somebody to you that was working with, 1-800mortgage.com or whatever the online thing was. And you've got to be very careful because there's a lot of slick willies out there that will say one thing to get your business, and then it's just not the true story. So at least use Ian. I trust Ian with my life. Sent a ton of our clients to him for years. If that wasn't the case, we wouldn't be able to do it. He's got a ton of repeat business from us. Because he's honest, he tells the truth and the whole truth, nothing but the truth. So if you need a lender up north, Ian's your guy. And this market is good.
Geno's your guy.
This market is there's some opportunities out there. Who you work with matters. You need an agent, whether it's me or another great agent in Northern Michigan, that can structure the best possible deal for you and guide you through the landmines that you may not see. And you need a lender. Look, Ian's a great lender. He's not the only great lender. He's my favorite. But plenty of out here. Just make sure you've got the right team on your side, and you should have a lot easier time. So anything else before I let you go and hang out with your daughter for the night?
I'll say like what I love about working with you, because this is like relevant to anybody. If you're thinking about hiring a realtor, even if you're not, there's a difference between a professional real estate agent or a professional realtor and just a real estate agent, right?
For sure.
So Absolutely. If you've got a buyer and you're working for them, you're not afraid to pick up the phone, call the other agent, work it out. And that sounds simple. There are so many agents that we run into in our business where they just they don't have the confidence, or I don't know what it is, but they just can't negotiate and they can't hammer out the details. And the details are what matter the most, right? Like anybody can say the purchase price is going to be this, but you need every part of that contract to be perfect for it to work for both sides. And you know, you guys are fantastic at that. Like,
and to piggyback on that, I think
know.
whether it's you or me, I think an offer with my name on it stands a better chance than an offer with somebody that's not me. And I think your pre-approval letter is much better than somebody else's pre-approval letter. So again, who you work with matters. So a little
bromance never hurt nobody. I mean,
right,
but it's true. Like, the last thing I'll say, like, we see purchase agreements where we'll have like 6 addendums.
Yes.
That's insanity, right? Like, pick up the phone, talk the transaction through before you're writing the offer, going back and forth. Like, occasionally, maybe that makes sense, but like, it should be the exception, not the rule, right? Like,
for sure.
I like the way you guys handle stuff and take care of clients. It works really well, I think. So
we've got a great program. Leave it at that. Thank you so much, Ian, and let's talk soon.
Thank you.
All right, bye.